Assalamualaikum and a very good day to Madam Musmailina and all my fellow group members. My name is AFEEQA. Today, I will begin our presentation by explaining Part A, Data Flow Diagram Production Cycle. I will start explaining the first process, which is the review order and inventory. This process is the starting point of the production cycle because it determines whether the company needs to produce more product or whether the existing inventory is sufficient to meet customer demand. So, let us look at the input first. There are two input data flows entering this process. The first input is customer order information, which comes from the sales department. This includes details such as the type of clothing ordered, the quantity requested by customer, and the required delivery date. This information tells the company what the customer needs. The second input is inventory level, which comes from the inventory file. This file contains information about the quantity of finished goods currently available in stock. This helps the company to know whether they have enough inventory to keep up with the customer demand. Finally, let's look at the output of this process. There are two outputs. The first output is the recorded master production schedule or recorded MPS, which is stored in the MPS file. This document serves as the official production schedule for the factory. The second output is the production objective, which are sent to process to prepare bills of materials. These objectives specify what products need to be manufactured and in what quantities, allowing the next process to determine the raw material required for production. That's all from me.
Next process, number 2, which is prepare bills of material or BOM. The input for this process is the production objective that comes from the master production schedule or MPS. In this step, the company prepares the bills of material, which is the document that lists all the raw materials, parts, and quantities needed to produce a product. We can think of it as a receipt for manufacturing. The purpose of this process is to translate the production plan into a detailed list of material requirements. This helps the company knows exactly what the material are needed before the production starts and avoids material shortage or waste. The output for this process is the bill of materials, which is the stored in the BOM file. This document will be used in the next process, which is material requisitioning to request the required materials.
Now, we move to process 3, request material. After the system calculates the raw material needed from the bills of material, it must request 3 material for production at AISHA Textile. This is done by creating 3 copies of the material requisition form. The first copy is sent to the purchasing department. This lets the purchasing team know what material are being used so they can plan future order from supplier. The second copy is sent to the storeroom department. This copy tells the storekeeper which material, color and quantity need to be prepared and given to the production team. And the last one, the third copy, is kept in the material requisition file. This copy is used as a record for future reference and auditing. This process is important because it clearly separates planning the material from handling and storing the physical material, making the system more organized and easier to control.
Now, I will explain process 4, which is the production operation. This process begins with the materials transfer from the storeroom. The raw material is needed to start the production of the ready-made clothes. During this stage, all production activities such as cutting, sewing, assembling, and finishing the clothing are carried out. The main purpose of the process is to transform the raw material into finished goods. They are ready for next stage of the production cycle. The output of this process is the updated bills of material file. Updating the bills of material provide accurate information about the actual material consumed during production.
Next, I will explain process 5.0 and process 6.0 in the data flow diagram for AISHA Textile Sdn Bhd production cycle. Process 5.0 focuses on recording employees' working hours during the production process. The input for this process is the labor hours worked by production employees. The company records the time spent on each production job using job time ticket. This is important because it helps capture the actual labor time for each job, allowing the company to calculate production costs more accurately. After the job time ticket is prepared, it is sent to the accounting department for wage calculation and payroll processing. Once the production is completed, the process moves to process 6.0, which is package and store finished goods. The input for this process is the finished garments produced during manufacturing. The clothes are packed individually and sorted according to their designs and colors before being placed into designated containers. Finally, the finished goods are transferred to the warehouse for storage. This ensures that the products are well organized, safely stored, and ready for delivery when customers place their orders. This completes the explanation of processes 5.0 and 6.0 in the production cycle. I will now hand over the presentation to my next group member who will continue with part B.
Right now, let's move to the part B, question number 5. Based on question 5A, adjusting entries are recorded at the end of the financial year. Their purpose is to make sure that all income and expenses are recorded in the correct accounting period. This helps the financial statement become more accurate. There are 5 types of adjusting entries. First is accrued revenue. This is income that has already been earned but the company has not received the cash yet. For example, Sunrise Catering has completed an event, but the customer has not paid. The company still needs to record the income. Second is accrued expenses. These are expenses that have already happened but have not been paid yet. For example, wages or utility bills. Even though the payment has not been made, the expenses must still be recorded. Third is prepaid expenses. This happens when company pays in advance, such as rent or insurance. As time passes, the part that has been used is recorded as expenses, while the remaining balance is still an asset. Fourth is unearned revenue. This is money received before the service is provided. For example, customer may pay a deposit for a future event. This amount is recorded as liability until the service is complete. Lastly is depreciations. Depreciation is the decrease in the value of assets over time because of the usage. For example, catering equipment become less valuable every year, so depreciation is recorded as expenses.
Based on Sunrise Catering situation, there are 2 key ways a well-designed audit trail can assist in verifying the accuracy and authorization of financial transactions. The first way is by tracing transaction flow to ensure accuracy. An audit trail records every transaction from the original source document, such as an invoice or receipt, all the way to the general ledger. This creates a complete record of how a transaction moved through the accounting system. In Sunrise Catering case, the company is facing problem because some employees are losing source document and recording payment incorrectly. As a result, there are difference between the invoice and the balances shown in the general ledger. With a well-designed audit trail, the accountant can trace a transaction either backward from the general ledger to the original invoice, or forward from the invoice to confirm that it has been properly recorded in the accounting system. This makes it much easier to identify where an error has occurred, whether a document is missing or whether a transaction has been entered incorrectly. Therefore, an audit trail helps improve the accuracy of the company financial record and reduce the risk of mistake. The second way is by confirming authorization and ensuring staff accountability. Besides recording transaction, an audit trail also records important information about each transaction, such as who entered it, when it was entered, and what changes were made. This information creates a clear history of every action taken within the accounting system. This is especially important for Sunrise Catering, because the company has experienced disorganized transaction recording and some employees have been recording advance payment as revenue too early. With an audit trail, the owner can easily identify which employee recorded or modified a transaction and check whether that employee had the proper authority to do so. If there is an unauthorized change or an incorrect entry, it can be detected quickly because every action is recorded with the employee user ID and timestamp. This also encourages employees to be more careful and responsible as they know their action can be traced back to them. In conclusion, a well-designed audit trail helps Sunrise Catering maintain accurate financial record while also strengthening authorization and employee accountability.
Now, moving on to question 5C. The company experienced fluctuating numbers of events each month, which affect labor and supply costs. Explain how a flexible budget could help Sunrise Catering manage this issue more effectively. Before discussing how a flexible budget can help, let's first understand what a flexible budget is. A flexible budget is a budget that adjusts budgeted amounts based on the actual level of business activity rather than relying on a fixed forecast. In Sunrise Catering's case, The level of business activity refers to the number of catering events handled each month. Based on the case study, Sunrise Catering experienced fluctuating numbers of events every month. As the number of events change, labor and supply costs also fluctuate. This makes it difficult to manage costs effectively using the same budget throughout the year. Therefore, implementing a flexible budget would be a more suitable approach. There are three main ways a flexible budget can help Sunrise Catering. First, accurate performance evaluation. A flexible budget helps the company compare its actual labor and supply costs with the expected costs based on the actual number of catering events. This gives management a fair and accurate way to evaluate the company's performance because the budget changes according to the number of events. Second, proportional cost control. A flexible budget also helps control costs more effectively. Since labor and supply costs increase or decrease depending on the number of the events, the company can easily identify if it is spending too much or wasting resources. This can help management to take an action to reduce the unnecessary costs. Finally, better resource planning. A flexible budget helps Sunrise Catering plan its resource better. The company can estimate the number of staff needed, the amount of food supplies to prepare, and the cash required based on the expected number of events. This allows the company to be better prepared during busy and slow periods.
Next, moving on to question D. The first financial goal that Sunrise Catering should prioritize to remain competitive in the catering industry to improve profitability. Improving profitability is important because it ensures the company to generate sufficient profit to sustain its operation and support future business growth. As Sunrise Catering continues to expand by serving more corporate events and weddings, the company must ensure that its revenue grows faster than its operating costs. Sunrise Catering can increase profitability by increasing their sales if it's accompanied by effective cost control. For example, Sunrise Catering could review its pricing strategy to ensure that the price charged are sufficient to cover costs and generate reasonable profit. The company should also minimize food waste through proper inventory management and production planning, as this could help to reduce unnecessary expenses. To achieve this goal, Sunrise Catering should closely monitor and control its operating expenses. This includes labor costs, food and beverage supplies, transportation expenses, utilities, and other overhead costs. By managing these expenses efficiently and eliminating unnecessary costs, the company can improve its profit margin while maintaining the quality of its catering services. By improving profitability, Sunrise Catering will have more financial resources to invest in better equipment to expand its services. This could enhance customer satisfaction and strengthen its competitive position in the catering industry.
Next, Sunrise Catering should improve cash flow management to remain competitive in the industry. To improve it, Sunrise Catering can implement several strategies. First, the company should collect customer payment more quickly by sending invoice immediately after each event and following up on overdue payments. Second, the company should establish clear payment terms and deadlines so customers know exactly when payment is due. Third, Sunrise Catering can require customers to pay a deposit before the event takes place. This helps the company cover part of the event costs before providing the catering service. Finally, the company should regularly monitor its account receivable to identify overdue account and take prompt action to collect outstanding payment. Prioritizing cash flow management provides several important benefits. It ensures that the company has sufficient cash to support its daily operation without interruption. It also reduces the risk of cash shortage, which could delay payments to suppliers or employees and negatively affect business operation. In addition, having a healthy cash flow allows Sunrise Catering to accept more catering booking, invest in better equipment, and respond quickly to business opportunity, helping the company remain competitive in the catering industry.